today we are going to review a few opportunities in this choppy gold that we've been having in the past few days, just to show you that you can adapt to lower time frame and get quality setup. So right now we are on the 5-minute time frame on gold. If we just look back at today, we had a lot of great setup that provided good risk to reward. So if you took this swing high to this swing low, for instance, by aiming for this high to this low, then you'll get 39, and you'll grab your calculator, and then we would hit 39, and we divide that by 2.6. That gives us 15, and 15, then we'll take our high, and then we'll drag down until we get 15, which is around here. We can see right here on the London session we had a nice sell opportunity here, as you can see, and we can clearly see that in this scenario, well, the safest place to put your stop loss is here, but that's a bit wide, and then you'd get 1.7 hour. But if you are more strategical and you understand structure, then you would be able to place your stop loss above this high right here, or even above this high right here, right? And then you would get a 3-hour setup. Then from that trade setup, we had a micro setup within that setup. When we look at the impulse from this high to this low, this swing high to this swing low, we have 18 here. So we can grab our calculator, and 18 divided by 2.6, so that is 6. So this is a scalp trade because the market is a little bit consolidating, and we can see 6 is right here. The market tapped this level twice and provided a nice drop for the London session. Stop loss can go above this high. You can see that we have maximum 6R here. Then when we look left, right, we have this swing low here to this swing high. Okay, so if we take this swing low to this swing high, we have 88. 88 divided by 2.6, that's 33. Then 33, we will start here until we get 33, and then 33 is right here. And on the US session, we would got a nice buy opportunity right here, and stop loss underneath this low right here, and then this trade would have provided another 6-hour setup. So again, you can see that it's pretty accurate once you understand that we are measuring swing highs and swing lows. So basically, technically, yeah, to make it simple, this is basically a bounce on the 61.8, right? So if you take your Fibonacci level, you take from this high to this low, this is just a bounce on the 61.8, right? The calculator is just a fancy way of doing it, to be honest. If you take this high to this low, it's the same here. It's a 61.8, right? If you take this high to this low right here, it's another 61.8 entry, right? Now, the other way we do it is, for example, in this area here, as you can see, we had a nice trade opportunity from this swing high to this swing low. Now, how do we get this level in advance is when they break this swing high right here, then we can, two things, we can take like this, right, and then have 40 here. We divide that by 2.4, so we'll go with 40 divided by 2.6, not 2.4, and then that's 15, and then we'll just get the level here, And as you can see, the price went a little bit higher. So that is when we go sometimes on the 1 minute time frame, because you see we have another break here. So let me show you this better. So if you go on the 1 minute time frame, our level is telling us we should be looking to sell at this range, right? But then the price extend a little bit higher. So then you can repeat the process like so, because we have a swing high, swing low, the market breaks a little bit higher, right? Because this is our level. Our level is right here to sell, and the market goes slightly higher. So what we can do is readjust because the market breaks. So that's what, 11. We divide that by 2.6. And that is 4. So then we go 4, and we can see 4 is around here. So the price is very pinpoint, and then we get that nice drop. Now, if we did miss that opportunity to sell here, then we can just take our fib level like this, and then we can drag from this high to this low. We get a 61.8 entry here. It's the same, like I said, if you use your the range, if you do the same here from this low, from this high to this low, that's 19, and you divide it by 2.6, that's a 7, and that 7 basically you'll get it from this high to this low, as you can see, 7 right here. So it's the same, right? Okay, and that allows you to get that beautiful setup, right? And that's really it. Like, we're using basically Fibonacci mathematics to get clean entries, high risk reward trades. And yeah, so right now we are waiting for this bigger setup on the 1 hour time frame. Hopefully the market, because it looks like the market is consolidating, right? So accumulation, probably we're gonna get some form of, right, accumulation, manipulation, and then distribution to the upside. Another way we can calculate it is just using the fib from this low to this high, and we can see the 61.8 is right here, right? So now if we use also the range, it will give us same price because it's based on Fibonacci 271. We can divide that 271 divided by 2.6, and that's 104. So 104 we're gonna take here, and then we can see 104 is around this price. As you can see, it's the same, right? So so you use the fib when you want to follow the trend. Now, as you can see, I have a fib level for the opposite direction. So what do I mean by the opposite direction? So let's say I wanted to get you see how I'm dragging my fib, right? So let's say I wanted to get a buy entry right here, right? And then this is the support level that was broken. Then I would start to drag my fib from this low to this swing high, because it's the last swing high before they broke this level, and then we'll look to enter at the level of the fib 138. Sometimes the market extends to 161, and then you'd enter here, right? So this is like the reverse of it, and here is the same. So you see we have swing high, right, all its pivot point. So if you take your fib from this swing high to this swing low, you can see right here we identify with the 100 level is here, the 0 level is here. Why? Because it's the last swing low before we broke this pivot level, right? And then the price comes and bounce at 161, and then that's where we can get our entry between 138 and 161. So your fib levels are here. You can pause, and then yeah, you can have the same if you want, but essentially that's the glitch, I guess. It's not a glitch, but I mean it's the best way to trade gold, by using these numbers, by using this logic, and it helps us get accurate entry. Okay, so if you want to be mentored, just make sure to contact me, and then we can set you up so that we can work together as a team. If not, if this is enough for you, then you can just back test it and see how you can make it fit into your daily schedule.